Hello and welcome to Crypto Weeklies. Today in this video we'll analyze what it means to be a crypto investor at this point in time. We'll analyze the social sentiment as well as some of the crypto related forecasts. None of the content is financial advice. This is use of machine learning and statistics and data science to analyze what is the overall crypto sentiment at this point. Over the last 24 hours, some of the key bearish narratives related to crypto over here. Solana may struggle to hold $130 as bears aim for further decline. Right now, the price of Sol is slightly above $139. So, if there were a further crash, that is one of the narratives to watch out for. Also, Celsius and iconic digital updates related to distribution and machines key and clawbacks. This is a bearish narrative, and a couple others related to crypto related warning and Bitcoin miners selling and what it means for Bitcoin at this point in time. The overall social sentiment over the last 24 hours is at around 55. If you go and check coin market cap, they have a fear and greed index. The current level is at around 46, again a neutral territory. Over the last one day, the market has crashed by about 1.5%, still about 2 trillion. Bitcoin failing to go beyond 60k meaningfully. And again, if we were to check the narratives over the last 7 days, this is our word cloud based on the content on YouTube and X related to crypto over the last 7 days. The popular narratives: Cardano is gaining popularity in terms of the discussions. Bitcoin definitely the most popular narrative. A lot of people are still bullish on the market. Ethereum, again, one more narrative. Again, the talks about Durov and the arrest related to Telegram. So in so far that bearish narrative has not crept up. OpenSea is being discussed, again related to NFT. XRP and its popularity is still maintaining its popularity on the narrative cloud, although the size is diminishing. Solana, one another crypto, gaining some popularity. Telegram related discussions are gaining some popularity. So, if you were to summarize this, bullishness is still being a social sentiment. Also, Cardano and XRP and Solana, ETH, and Bitcoin are garnering most of the attention at this point in time. Altcoins are as a asset class together have a meaningful presence on the attention span of the crypto market. Narratives such as NFTs and deep in related plays are also being discussed. And again, recent news related to Telegram is garnering some attention. If we were to go back and analyze what it means to be in the market at this point in time, the SMA based risk, normalized risk between 0 and 1, is pointing to a story that the current environment is kind of a low risk environment. If you were to zoom in, the risk for BTC and ETH is both between 0.2 and 0.4. ETH at around 0.23 risk, BTC at around 0.28 risk. That means if you this is calculated based on the price under 20-week simple moving average. Historically speaking, this is the second best time to be in the market. Again, layering into the market, if you have bought over here, and that when the risk that is in March 2024, when the risk was at around 0.9, it might definitely feel that the portfolio is not doing that great. But again, that's the purpose of this analysis, to identify if the market is overheated, and then at that and at those point, skipping entry or exiting the market makes more sense. And whenever the market presents an opportunity, like it did in early mid August when the risk level for BTC was sub 0.2, that's when entering the market makes more sense. This is the second best time to enter. If that is again with a blank slate. If you already are holding a lot of crypto, then it might be a different story altogether. In terms of analyzing the market in a normalized risk between 0 and 1, analyze not just Bitcoin and ETH but top 100 cryptos by market cap. This particular peak value analyzer provides a 24-hour snapshot and looks at historical data since January 2021 to identify which phase of the market we are currently in. The latest risk score at around 0.18. That means it's not a very high risk environment. The risks are depleting from March till about today, towards the end of August. You can see that most of the August was spent in this green zone, that is in the low risk territory. The ultimate bear market presents an opportunity in the blue zone, which is the lowest risk between 0 and 0.1. This is between 0.1 and 0.2. The second best time to DCA per this historical analysis. So that's where we are at. And if you want to know how it is calculated, the description is over here. Combine several price related risk factors such as volatility, alpha, beta, Sharpe ratio, and also percent drawdown to quantify what is the overall risk at this point in time. You can see whenever the color code goes to red or orange, that's when the market is overheated. Typically yellow is the moderate risk or a neutral zone. You may choose to layer out or pausing layering in whenever this when the market gets to the yellow zone. Green and blue, again, this is again not financial advice. That's when the market presents a decent entry opportunity. Orange and red is when market has presented a decent exit opportunity. In terms of analyzing crypto and their regression based analysis, the key to the crypto market is analyzing what Bitcoin is doing. At this point in time, the regression based analysis for Bitcoin is telling this. The price of BTC, this is the polynomial regression based analysis. The base regression function is in pink. To its top are the 3 1 standard deviation, 2 standard deviation, and 3 standard deviation lines in yellow, orange, and red, marking 1 standard deviation, 2 standard deviation, 3 standard deviation ceilings. The floors are the light green or lime color 1 standard deviation floor. The 2 standard deviation floor is dark green, and the 3 standard deviation is blue. So the key idea is in the depths of the bear market, whenever the price is below for Bitcoin, below this lime colored green line, that's when Bitcoin ideally presents a decent buy opportunity. You can see back in the 2018, 2019 and early 2020 crash. That's whenever the price was below this green line, that is supposed to be the best time. Again, in the last bear market since November crash of 2022, when the price of Bitcoin went sub 16,000, that's again identified by this 1 standard deviation regression line. That was a good zone. Right now the price of Bitcoin is slightly under the fair value. The fair value of Bitcoin is at around 68k. The price is somewhere at around 59, as we saw, 59,500. That means per the fair value line, where the price currently is at around 7 to 8,000 below the fair value. That means if there were a mean reversion rally, the key level to watch at this point would be at around 68k. And if we were to kind of manage our expectations to a 1 standard deviation approach, where the market stays in this zone about 70% of the time, if we were to look what is the theoretical upside and downside using just the 1 standard deviation and 1 standard deviation ceiling in yellow and the 1 standard deviation floor in light green, that would also present us with a interesting story. Over here we can see that 1 standard deviation ceiling at this point is at around 112k. Bitcoin has not seen a 1 standard deviation ceiling in quite a while. The last time Bitcoin came close was at when the price was at around 72, 73k. At that point, this 1 standard deviation ceiling was at around 79k. So again fell short by about 8,000. Right now, if the price were to rally a lot and would see at least first above the fair value at around 68k, when the price of Bitcoin crosses this 68k level, the secondary level to watch is at around 111k, which is quite a distance above the current value. You can see the last time Bitcoin had a peak above the 1 standard deviation ceiling was way back in early 2022, when when again this could be classified as a dead cat bounce from its November 2021 high. Ever since that, we haven't seen that one standard deviation ceiling. Right now, it is at around 112k. The one standard deviation floor is at around 40k. So, if you have a bearish hypothesis, that is again one key level to observe if the price goes sub 40k. So that's a key observation from the regression analysis, is that whatever Bitcoin does, the alts usually tend to follow, and most of the crypto market is correlated. So with this observation, the key for the crypto market to go back into the bull mode is Bitcoin going back to its fair value at around 68k, and then from there, from that point, we can check out the other aspects of the market as well. So with this, I would like to conclude the video. Hope you enjoyed the content. If you did, please subscribe to the channel. Also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.